So let's go ahead and kick this off. Welcome again. My name is Mark Silverman. I always like to show, of course, the disclaimer. This is important because we're talking about trades, results, profits, losses. I don't think I need to tell you, but you obviously know that there's risk in trading. Certainly when we talk about options, your risk is nice in a way because it's going to be a fixed risk. You're always going to know your maximum risk, which is going to be the price of the options contract. A little bit different than futures and Forex, which can, of course, go well beyond the margin. So that's another big benefit of options trading, just having that very controlled fixed risk, but there's absolutely still risk in the trading. And really what we want to do is talk about this kind of hidden gem, this hidden opportunity. It's interesting. Over the years, we've been doing this for 17 years. When we started out, we actually focused on only options trading, and that was the place to be. And over the years, as the E-mini futures came along and then Forex came along, options in a way sort of got a bit overlooked and overwhelmed. But all along the way, there's thousands and thousands of professional traders, floor traders, etc., who rely on options. All the major hedge funds, mutual funds, etc., are involved in options and stock. They're not all involved by any means in futures and Forex. There's a real reason for that. So it's a really unheralded opportunity, and we're going to talk to you about how you can use PTU, how you can enroll in the university and actually learn the strategies that we're going to show you. So we've been around since 1996, like I mentioned. That's why when we started with a stock options advisory. We called it SOAP, S-O-A-P, Stock and Options Advisory. And at the time, we actually used to fax our signals out, if you believe that. It's been a long time. Certainly the internet became the thing. A lot of people back then didn't really have an email or didn't know how to use it. And we were into OEX options for a long time, and then really evolved into all the active trading areas, Forex, futures, stock, and options. Mike Rixey, who's going to be grabbing the mic here in just a couple minutes, is in the bottom left there. So he's going to sort of take it from here and give you a specific presentation on the opportunities in options. I think it's very exciting when you guys see what you can do with this. So definitely looking forward to welcoming Mike. Brian Short is there in the top right, so he's, like I said, here live with you as well today, answering the questions, and myself in the top left, Mark Sorberman, and then the rest of the team that helps support the PTU, the Premier Trader University, every single day. We're all involved in the markets, and obviously looking forward to sharing this with all of you. So with that, I'm not going to delay this any longer. I'm going to go ahead and hand it right off to Mike, and he's going to take it away.
Okay, thank you, Mark. So let me go ahead and work on getting my screen up for you guys. And Mark, if you could just let me know that my charts are showing on the screen.
Yeah, it looks really good to me.
Okay, perfect. So I too want to welcome everybody. I want to thank you for joining us, taking some time out of your weekend to talk about some stock options trading. For those of you that have heard me talk in the past, you know it's a big part of my trade plan. I've been trading options for over 10 years now, and I do day trade futures. I've day traded some Forex in the past as well. I do love to day trade, but if you were to force me to choose one way of trading the rest of my career, it's going to be with options, and a big factor for that is the whole time aspect. Okay, I love day trading, but it takes more time. I don't always have a couple of hours each morning to day trade. So if I'm not able to day trade, if I'm not swing trading, that means I'm not involved in the markets at all. So by swing trading with options, it allows me to stay active in the markets regardless of what my schedule looks like. And we're going to get into more of that here in just a second. I'm also going to walk through a number of recent trades that I've taken just to kind of walk you through what types of setups I'm looking for, how I take them, what type of strategies I put on with the options. We'll take a look at a few trades here in just a second. But before I do that, I want to cover some topics that they come up all the time. As I work with traders each and every day, these are topics that I just see traders struggle with all the time. It really, to be honest with you, with me, it bothers me because it could be so avoidable. So we'll get into that here as I bring up my slides. So the question that we pose to you guys here today: is it possible to see 100% returns with options? Okay, if you're like me, you get emails all the time talking about just incredible returns with options, but is it possible? And when the trades don't work out, what do the losers look like? I think that's really important when you start to analyze specific methods to trade with. It's really important to look at the upside and the downside. So we're going to get into that more here in just a second as well. Okay, one of the issues that I hear from traders all the time, a lot of traders that I work with either have one of the NetPix systems or they're using a completely different system altogether. Okay, but the problem that I see is that a lot of traders let way too many outside influences affect their overall trade decisions. So my question to you is, how are you finding your trades? Okay, if you've got a system out there, it might be a NetPix system, it might be a system that you've created on your own, doesn't matter what it is, but if it's a system that you're trading religiously, day in and day out, that you're committing to, perfect. I applaud you. You're way ahead of most traders out there. But if I really push you guys to be honest with me here, I think a lot of us in here will admit to letting some of these outside influences affect our trading decisions, whether it be the Wall Street Journal, Investors Business Daily, CNBC, or over the past year or so, Twitter. There's a lot of professional traders on Twitter throughout the day posting what they're doing in their own trading. Okay, if you're letting those influence your trading, you're making a big mistake. Okay, the problem with that is you're basing your trading decisions off of somebody else's research. Okay, if you're trying to trade based off of earnings releases or an analyst upgrade or downgrade or what you saw in the Wall Street Journal over the weekend, the problem with that is as a retail trader, by the time we have access to that information, all of that is already baked into the stock price. Okay, we can't benefit from that. So what I'd rather have you do is take a look at a system like the one I'm going to show you right here. This is a PTU system, one of the NetPix trading systems, and this is just trading pure price action. Okay, we have a few indicators on the chart. They're telling us exactly where to get in and where to get out, but I'm not taking into consideration earnings. I'm not taking into consideration what they're saying on CNBC the day before. That does not matter to me. Okay, you need to find a way to filter that out. And if that means turning CNBC off, not reading those news publications, I would encourage you to do that. Okay, this is the way as a retail trader that you're going to be able to find success. And that's by using a system that gives you very defined entry and exit points. Okay, and that's really step number one to becoming a successful trader. Okay, so if I go to the next slide, if you've been involved in the markets for an extended period of time, you might be looking at these three and you might be saying, well, gosh, Mike, that's stuff I hear all the time. It's very basic stuff. But I can't tell you how many traders I talk to on a daily basis that struggle with one or all of these. So it's really good to review. So number one, we just got done talking through. Okay, whether it's a NetPix system or not, it might be your own system. Absolutely important to have that system in place that puts the odds in your favor that you can trade with confidence. Okay, if you don't do this, you're going to find that the emotional aspect of trading is going to come in. You're going to start making trade decisions that you really don't have anything to back up. Okay, so that's step number one. Step number two, have a watch list of products that can be traded consistently. Key here is diversification. Okay, I talk to way too many traders that are bouncing around back and forth between markets and time frames and systems way too frequently. One losing trade or one losing streak and you're off to the next market or you're off to the next system. Okay, it's very dangerous. You're not going to, in most cases when you do that, you're not going to give yourself enough time with a given market or with a given system to let those odds go in your favor. Okay, what I'd rather have you do is really zero in on just a couple of markets. In this case, we're talking about stock and options tonight. So I would love to see you really zero in on 3 to 6 names to where over the next couple of months you can really get in and learn how those stocks move. Get very comfortable with their price patterns, how long the average setup takes. That really can be valuable, can really give you a jump start in your trading. Step number 3, have a very specific trade plan in place before getting into a setup. Now don't confuse this with step number 1. It's very different. What I'm talking about here is before you even get into a setup, you need to have documented rules in place for yourself that are going to guide you throughout the trade. So for example, when you get into a trade and you start to approach a target level, What are you going to do? Where are you going to move your stop? How are you going to manage that trade? And we could back it up even further before you even get into the setup. How much of your account are you going to risk per trade? Okay, all that information is very important to have documented. Because what you're going to find, if you get into a trade without this stuff documented, it's human instinct. The minute you start to get profits on the table, you're going to want to move that stop up. You're going to want to lock in profit. You don't want to let that turn into a loser. And in a lot of cases, when you do that, you're going to find yourself getting out too early, and you're going to be stuck in the long haul with a lot of partial winners and full losers. Very difficult to see success in the long run by doing it that way. Okay, so what I'd rather have you do is have a very clear-cut trade plan in place that once you get into a trade, you know exactly what you're doing start to finish. If you can master these 3 steps, you are so far ahead of most traders out there. Because as I continue to work with traders on a daily basis, it's where I see most people struggle. Okay, so starting Tuesday morning, when we open up Tuesday morning, if you do not have all 3 of these points covered, stop what you're doing. Make sure you take some time to master these 3 steps before you put your hard-earned money on the line. Okay, so with that being said, let's talk a little bit more about options specifically. Okay, the best part about trading options for me is the time aspect. Okay, with one of the poll questions that Mark asked you, a lot of you responded that you have 2 to 4 hours to trade every day, sometimes even more than that. And that's great, but what happens on the days that you don't have that amount of time? Okay, you still want to be involved in the markets. For me personally, I don't have any desire to be stuck in front of the computer for any more than a couple hours a day. I don't want to track every tick in the market. I mean, that's going to drive me nuts if I'm forced to do that. So what I'm going to show you is a way to trade options, be involved in some swing trades in less than 20 minutes a day. Okay, so here's a glimpse of my daily routine. I come in before the open. Okay, whether that be the night before, I prefer the morning, the current day that we're trading. I'd like to come in before the open, take a look at the futures, see where we're going to open up. Are we going to gap up? Are we going to gap down? I like to go through all my individual charts, take a look at where they're going to open. That way I can start to form a plan for the day. Okay, do I have any new setups that I need to be ready to act upon after the market opens? If I'm in any setups, do I need to make any adjustments on targets or stops? I like to do that all before the market opens. That typically takes me 10 to 15 minutes a day, depending on how many trades or how many stocks are on my current watch list. Okay, so once the market opens, if I need to place any trades right at the open, I'll do so. That typically takes a couple of minutes. And then the rest of the day, I'm just coming in periodically. Okay, it might be around lunch or a couple times in the afternoon, just taking a quick glimpse of the charts. Okay, if you're looking at 3 to 6 names, you can typically do that in a minute or 2 max. Okay, and then you can move on with your day. And the way I'm able to do this is I set price alerts on the chart. Okay, and I'm going to walk you through an example here, and why don't we do that right now? So let's go back over to the charts. Okay, and what I did is I loaded up a workspace. I have 6 names shown here. Okay, this is a good starting point. These 6 names are on my overall watch list. I do have a few additional names as well. But in most cases, when I work with traders that are looking to trade stock and options, on average, I have people looking in between 3 and 6 names. Okay, so what I wanted to do is give you a sample workspace here. I have a pretty diversified list. I have some individual equities. I have some ETFs. I have a number of different sectors covered, so it's a pretty diversified list here. Okay, so let's go ahead and set this up for Tuesday morning. The market is closed tomorrow due to President's Day. So when we come in Tuesday morning, how am I going to go through the charts and how am I going to form my plan for the day? And you know what? Let's go ahead and time this. It's now 7:23, so let's just track how long this takes to do this. Okay, so let's go ahead and start out with the top left-hand corner. This is symbol JPM, JP Morgan Chase. Okay, the system, this is the PTU system, one of the NetPix systems, so everything is outlined for me, and that's the way I'm able to trade this in under 20 minutes a day, because I'm not coming in here looking at earnings releases. I'm not doing a bunch of fundamental research or looking at 5 different time frames. It's not necessary. I'm looking at one chart, and I'm looking at one system with just a handful of indicators. Okay, so you can see this setup that came on the chart last week. I have my entry point there, I have my targets and my stop, and we're currently in this trade. So I've got my target up here. I'm going to mark that with a horizontal line. I have my stop down here. I'm going to mark that with a horizontal line, and I format these lines so I have these alerts either sent to my computer. So if I'm in the office but not looking at the computer screen, an audible alert will be sent just to say, okay, it's time to get in front of the screen, manage the trade accordingly. Or if I'm out of the office altogether, I can have these alerts sent to my cell phone. Okay, if you've got a smartphone, most broker platforms have mobile platforms these days. So if I get an alert triggered, if I'm in this JP Morgan trade and I come in next week and we hit a target, that alert is sent to my cell phone. I can log into my mobile platform and place the trade in just a couple of minutes. Okay, if you don't have a smartphone, not a problem. Okay, if you get that alert, you can go ahead and call your broker, place the trade very quickly. I've done that in the past as well. So in this case on JP Morgan, we're long from last week. I have my alert lines in place, and I'm good to go. I move on. Okay, so let's go to the next name. This is symbol FXI. This is the China ETF. Okay, and this one, we're coming off a winning short trade, which we're going to cover in more detail here in just a second. But we don't currently have any setups on the table. Okay, we're flat. We don't have a long setup, we don't have a short setup, nothing to do here. So for Tuesday morning, nothing on FXI. Okay, so we move on. Next is symbol MRO. This is Marathon Oil. Okay, we came off a winning long trade here last week. We briefly had a short setup that didn't trigger in, and that has since canceled. So we're currently flat on Marathon Oil as well. Nothing to do. So we move on. Okay, let's also take a look at SPY. This is the ETF that tracks the S&P 500. We're currently long from last week. So in this case, we have our target marked. We also have our stop marked. So we have our alert lines in place, and we can move on. Okay, if you missed this trade initially and you wanted to get in sync with it next week on Tuesday, you could also mark the entry point. So you know as soon as the entry point is hit, if price action pulls back, you can get in sync with this trade next week. Okay, so with this chart, we're done. We're moving on. Next is symbol HD. This is Home Depot. Again, we have a long setup that is currently in progress. Okay, we have our alert line set in place. We have it set at our first target and our stop point. So in this case, I'm letting the trade work itself out. We briefly had a short trade that did not trigger in. It has since canceled. So nothing for us to do there. So we're just waiting for this trade to play out. Okay, so we have the alert line set in place for Tuesday. We move on. Looking at Apple. Apple's in a short trade from last week. It actually hit a first target, so if you're trading multiple contracts, you could have exited part of your position at the first target. Ultimately, we're going for the 456.60 level as our ultimate target. But we have our alert lines set in place. Okay, so when my alert lines are hit, I know it's time to go in and manage the trade accordingly. Okay, so for Tuesday's session, Tuesday morning, and what did we do that in? 3-4 minutes? Okay, that's all I did. That's all I do. Now, if we have some charts that have setups, let's just say 2 of these names have fresh setups for Tuesday morning. You know, that might take a little bit more work. We might need to go in and take a look at some of the options, some of the specific strike prices and expiration cycles to try to form a plan for what options we're going to play. But even then, that's going to add, what, a couple minutes onto it? So we're still in and out in less than 10 minutes, and we've looked at 6 names. Okay, so throughout the day, we're coming in for another minute or two, a couple of times throughout the day just to see, okay, is anything new setting up? Do we need to make any new adjustments? So we're in and out in less than 20 minutes per day. Okay, we did all our research for Tuesday morning in 4 minutes. I don't know about you guys, but I spend more time in the morning than that looking at the basketball scores from the night before. Okay, this does not take a lot of time. So if you're actively day trading, if you've got a full-time job that you're going into, you can still stay involved in the markets. Okay, that's the great part about swing trading with options. It gives me a lot of freedom as a trader. Okay, now some of you might be saying, okay, if you're looking at the charts for less than 20 minutes a day, well, I mean, what is your profit potential? I mean, how much can you really make if you're looking at the charts just for a few minutes every day? Let's be realistic. Okay, that's fair enough. Let's take a look at some recent trades. Okay, so I'm going to look at 4 names. These are all names that we just got done looking at. Okay, and we're just going to look at some very recent trades. And let's go ahead and start out with Apple. Okay, so again, the reason I'm able to get in and out very quickly is because I have a very clear-cut system in place telling me exactly where to get in and where to get out. 90% of the hard work is done for me before I even get into a trade. Okay, all I have to do is rely on the system that's on the chart. So in this case, we're going to go back to early January. Okay, actually, I haven't done much since earnings on Apple. The market's been very slow, very choppy. We've been caught in very tight ranges, a lot of false breakouts, low volume. So the market here recently really hasn't been that great. But let's take a look at what type of profit potential we have in a market that hasn't been that great to trade. Okay, so this is the last trade that I took on Apple. This is a short setup. The system's telling me to get short at 519.43. Okay, how do I play this? I have a few different ways that I can play this. I could short the stock, but if you're familiar with shorting stock, how many of us as retail traders have an account size large enough to short a $520 stock? It's going to tie up way too much capital. Okay, so what else can I do? Well, I can go in, and in this case, I bought the January 525 put. Okay, that gives me control of 100 shares of Apple stock at $525 a share until January expiration. So in this case, I had about a week and a half, and I paid $12.40 for this. So each contract represents 100 shares of stock. So my total cost here is $1,240 per contract. You can tack on a couple dollars for commission, of course. Okay, so for just over $1,200, I'm controlling 100 shares of a $500 stock. That's incredible leverage. Okay, in this case, I'm looking at a very basic option strategy. Okay, we're taking directional trades here, so I'm just talking about buying individual calls and puts. And in this case, in most cases, to keep things very simple, I'm talking about trading either the at the money strike or one strike in the money. Okay, that's typically my sweet spot on these trades. Now, these trades are also very quick. Okay, so I'm either looking at the weekly options. Okay, if that product offers weekly options, that's the first place I'm going to look. Otherwise, I'm going to look at the front month contract. Okay, typically I only need about a week to 10 days left before expiration for these trades to work out. A lot of times I get questions from traders saying, well, why don't you go further out in time? I've always been taught to buy more time. The reason being is because we're looking for breakouts here. We're looking for very quick trades. So by getting in with those shorter term contracts, that's going to give us the best bang for our buck. Okay, for reasons that I can't get into here today just because I don't have enough time to get into talking about some of the advanced features of options. But in this case on Apple, we bought this January 525 put. Okay, market chopped around. Actually, I missed this trade initially. I got in a couple days late, but you can see here how it just chopped sideways, and I had plenty of time to get in sync with it. We actually hit target. We hit full target about a week later. We held over a weekend, so you have a few weekend days factored in there. I ended up selling this contract out for $25.70. Okay, that gave me just over $1,300 of profit. That's 107% return in about a week's time. Okay, does that pique your interest a little bit? I mean, we're talking about looking at these charts just a few minutes a day, and we're talking about 107% return. Okay, those are the types of trades that we see on a regular basis. Okay, now some of you might be looking at this chart saying, yeah, you know, you're only spending $1,240 per contract, but that's still a little rich for me. I don't have the account size to be able to manage that. So, and that's fair enough. So let's look at another example. Let's take a look at symbol FXI. This is the China ETF. Okay, we looked at this trade briefly earlier. Okay, so the system gives me the short setup. Everything is defined for me before I even get into the trade. I have my entry point, my targets, my stop, everything's outlined for me. Instead of shorting the shares of stock, in this case, I bought the February 41 put for 73 cents. That's $73 per contract. Okay, so that gives me control of 100 shares of FXI at $41 a share till February expiration, and I'm paying $73 for that control. Okay, is that manageable for anybody? I mean, most of us probably spend more than that on our cell phone bill every month, or our cable or internet bill. Okay, this is a very manageable trade, regardless of your account size. Okay, this one moved pretty quickly down to target. We're in this trade just for a few days. Sold it out for $1.63. Gives us $90 worth of profit. Now, some of you might be saying $90, that's nothing to get excited about. Well, it is when you only spent $73 to get in. That's 123% return in just a couple of days. Okay, a lot of you could go ahead and put this position on with multiple contracts. You could put this position on with 10 contracts with a very manageable amount of money. So now all of a sudden, when you're putting this trade on with 10 contracts, does that look appealing to anybody? That's the type of trade that I see all the time on these types of products. Okay, now is every trade going to be a home run trade, 100% winner? No. I mean, the market's not always going to give us those types of trades. So let's take a look at a trade that, at first glance, it's a very ugly setup. I mean, not much went right on this trade. Okay, this is symbol MRO. This is Marathon Oil. This is a long setup. Okay, instead of buying the shares of stock, I'm going to go in and I'm going to look at the call options. So in this case, I bought the February 33 call for $1.41. So for $141 per contract, I have control of 100 shares of Marathon Oil at $33 a share till February expiration. Now in this case, I was looking for a quick trade on Marathon Oil. It did not play out that way. This thing chopped around for a couple of weeks. I mean, this is ugly. I mean, we thought we were going to hit target here in this first move. Price action pulled back. We actually thought we were going to hit a stop point. Then price action recovered and went back up and hit full target. Okay, this trade took twice as long as I first anticipated. So if you've traded options in the past, the time decay cut into our overall profit. Okay, we're paying a premium every day to hold that option. So because it took a little bit longer for this trade to play out, I did have a profit. I sold it out for $1.87. That gave me $46 of profit. That's a 33% return. Okay, this trade really, the only way it could get uglier is if I hit the stop point right here. I mean, it was a struggle from the get-go. But yet I still saw a 33% return in a couple of weeks. Okay, in a very slow, tight market that we've been stuck in for a couple of weeks with volume that's been basically non-existent, can you be happy with a 33% return? I know I am. I mean, that's exactly what I want to see. Okay, now, is every trade going to be a winning trade? Absolutely not. Let's take a look at a losing trade. Okay, what happens when the trade does not work out? Well, this is a trade that I took on Amazon last week that it didn't work out. It stopped out. This is a short setup from back on the 11th. Instead of shorting Amazon stock, I went ahead and bought the March 265 put for $12.40. Okay, that gave me control of 100 shares of Amazon stock at $265 per share till March expiration. So in this case, I bought a little bit more time here just because the market was so slow. I wanted to give myself a little added cushion there. I purchased a little bit more time. The trade triggered in. Initially it looked great, looked like the market was finally ready to roll over and pull back after a really nice run to the upside for all of 2013 so far. Unfortunately, the market recovered and moved right back up. And in this case, this trade stopped out. Okay? This is what happens a lot of times with the PTU system on a losing trade. My stop is initially up here around the 263 level. Well, when price starts to flip back around to the upside, I get a new long trade, so I'm able to move my stop down and reduce risk. So in this case, the trade doesn't work out. Okay, I stopped out of my short trade. I sell out of my options. In this case, I sold my March 265 puts. I sold them out for $8.20, so I took a $420 loss. It's a 34% loser. Okay, this trade didn't work out, and yet I'm able to limit my loss. So out of 4 trades, I win on 3 of them. I have 2 home run trades and 1 30% winner, which is not bad, and then a losing trade and a partial loser. Okay, that is the great part about trading options. I'm in and out in 20 minutes or less each day, and this is pretty incredible profit potential. If you did nothing more than trade these 4 names since the first of the year, you'd be very profitable. You're not running up trade costs with commissions like you would on the day trading side. Okay, you're not stuck in front of the computer screen for 4 hours a day like a lot of you are. Okay, you're able to get away from the desk and still stay involved with the markets. That's why I love these products. Now, if you're trading these setups, these directional setups, do you have to trade the individual calls and puts? No. If you have experience with options, you can put on some of the advanced strategies. You could put on a spread trade. Okay, you could put on a ratio spread. Okay, there's a lot of different ways that you can play this. What I wanted to do tonight is to show you with a very basic approach, just buying and selling individual options. Okay, you're able to get in at a very reasonable price point. Okay, we have very reasonable risk on the table with the potential there for home run trades. If you're day trading the futures or Forex markets, how often do you see 100% returns in a matter of days? Okay, I'm not saying it can't happen, but it's not very often that you see that. Okay, with trading options, you're able to get in and out and see those high percentage returns with very little time commitment. Okay, so there's a lot of different ways to play these types of positions. Okay, so hopefully I've piqued your interest at this point. Okay, if you're a full-time day trader, look to add this to the equation. Okay, it gives you great diversification. Okay, you get exposure to different types of markets. When the market gets slow on the day trading side of things, you can still stay involved with some swing trades. Okay, so I would encourage you to do some research here. Okay, if you've never considered options, or if you've tried them in the past but really haven't seen success, keep in mind that we're swing trading here. Okay, so we're not going to be as active. You have to give this type of trading, you have to give it time. Okay, you're going to have very slow weeks. You're going to have very busy weeks, but at the end of the year, you're going to be able to look back and say, gosh, I've got a really nice profit on the table. And that's really what's been powerful for me, because as a trader, as a full-time trader now for a number of years, I've really seen the consistency in my equity curve. I've seen that growth become more predictable when I get good diversification, when I get a good mix of day trading and swing trading. So if that's what you're looking for as a trader, this is a great way to do it. Okay, so if you have any questions on the trades that I just got done walking through, I know I had to move pretty quickly through that. I'd be happy to answer any questions that you might have. I can take a look at the trades that I just walked through in more detail. Be happy to do that. So at this point, Mark, I'm going to go ahead and throw it back to you.
Great, thank you, Mike. You know what I'm going to do, Mike? I'm going to go ahead and turn on Organizer for you as well, so you can see the questions. Brian and myself have answered a number of questions already, and there's obviously some more coming in. So I'll let you kind of work in the text there a little bit, and then let me present some information here. Then we can, of course, always go back to a specific chart to show somebody what they need to see. So let's just kind of go with that plan. So give me a moment here to take the presentation back and bring my stuff up. Okay. Great. So let's talk a little bit about some of the specifics on the university itself. And our objective is that you become what we call a lifestyle trader. You may have heard that term from us before, and what is a lifestyle trader? Well, I think what Mike's been talking to you about in a lot of detail suffices and kind of qualifies for this, because this is not about spending maximum amount of time in the markets. Options trading is great for actually spending the least amount of time possible. There's always work and effort that goes into trading. I mean, like Mike mentioned, the emails that you get where it's you can be on the golf course or on the beach and you're going to be just making Warren Buffett kind of money. That's not realistic. We're not here to kind of set you up for something that you cannot achieve. But you can absolutely achieve your goals in trading, whether it's an alternate source of income, full-time income, perhaps it's a backup plan, whatever the case may be. Everybody probably comes to this webinar with a little different objective. For usually about 2/3 of you, I know you'd like to get to a full-time income. Well, options can be a great way to start, in particular because it's not going to demand full-time effort. A lot of people have to have a day job when they start trading. We interviewed a couple people on Friday in our hangout, and both of those people are doing very well, in case you attended that, but they also have maintained their day job, and it takes a lot of the pressure off, but over time both have the objective of doing this full-time. So the way that we just kind of break it down into 3 easy steps, because we have to teach you what we've shown you today. We want you to be able to buy the puts and calls exactly where you should, the exact stocks, know exactly how to get in, get out, how to pay the right amount on the contract, of course how to book your profits. All these things we need to teach you inside of the training overall. So it's just a step 1, step 2, step 3 type process, just like we lay out here. The first step is what we call the prerequisites. So when somebody enrolls in the university, you would immediately start going through the videos that we put together that we call the prerequisites, and these are immediately available to you, and you can see some of the topics that we cover. This is all the foundation to make sure, like Mike says, we talk to a lot of people sometimes who logically know some things, but they're not actually following these things in their day-to-day. So whether it's the best markets to trade, using charting and chart analysis, working with trade systems, technical analysis, understanding even the trading mechanics, that's very important, right? You have to know where and what you should buy specifically. And in options, how important is it to know exactly which contract should you buy on the call side or the put side? Or should you even consider a more exotic strategy than one of the directionals? Certainly understanding how news and economic events work, risk management, and setting everything up, these are all critical. So we really have this philosophy that we want to get you first to sort of lay the foundation, and we've kind of put this together in a nice series of trainings that you'll just go through. You'll come out of this, and we have people from beginner to advanced all say that they learned a ton by just going through the prerequisites. So then you go into the undergraduate, and this is really where it gets exciting. This is where I get excited, because if I was in your shoes, I'd be like, all right, I got the prereqs down. Now teach me the system. Teach me how this is done. And we do this live online in the markets, 2 information-packed days in the comfort of your home or office, so don't worry, you don't need to get on a plane or anything like that. Come halfway across the world. Just how you're comfortable, hopefully now it's going to be the same way. The goal is to learn and master the strategies, to learn all the PTU trading strategies and the PTU trend jumper, which is also very exciting as well. So you're going to get everything taught to you during the undergrad. We do it very similar to something like that. This is a screenshot when we're going through the undergraduate education. Everybody who enrolls is interacting with us, the coaching team. We usually have about a staff of 5 to 7 that are also working with the class as we're presenting all of the training in the undergraduate. We go through everything very detailed. You'll notice that all of our trade systems are very much, I almost want to say color-coded, because we're a believer that everything needs to be what you see on the chart is exactly what you trade. That gets rid of all of the discretion and all the things that sometimes get people very uptight about trading. So everything is to take you through the system, the indicators, the software. But the best thing I think about the PTU is, like Mike showed you, you're always going to know where we want you to get in, where we want you to get out in advance of the trade. It takes away a lot of the emotion and stress that people go through. So all of this gets taught over those 2 days, and it's not a complicated strategy. We didn't build this to be impossible to understand. We built this so people can go through the undergraduate and literally come out the other side in the 2 days and be able to start trading. Step 3 is what we call the majors. So if you did attend college or university, you know that at some point they force you to get a little bit more specific, and we like you to get a little bit more specific as well. For instance, if you love what you saw today from Mike, you want to go through the major training on stock and options. But some of you may then want to add futures and Forex to the mix, or already might be involved in that. So we have majors for futures, for Forex, and stock and options. This is where we can get very specialized and intensive and really focus in on what makes options. They are different than if you're trading futures. There's a lot of similarities. The system itself is going to chart and look very similar, but you don't trade them quite the same way. So we can really get into the advanced topics and some of the really great specifics that go into options or futures or Forex. So same again, we do training that will look like this. There's interactivity, and we just take you through very specifically the markets, the trades, all the little nuances that make a difference in becoming a profitable trader. And remember we talked a lot about options and stock today. Well, it applies as well for futures. As a team, we collectively trade the futures virtually every day. I can tell you that I trade almost daily the DAX, silver, crude oil, wheat, obviously the indices such as the Dow and the Russell and the S&P. If you're a Forex lover, we're very involved in both swing trading, both on the daily charts and momentum charts, as well as some day trading as well, including the Forex futures. And then obviously, like we focused in on today, the best opportunities in stock and options and ETFs. And we focus in on a great hot list where all the opportunity is, and that's, again, to make it easier than trying to somehow choose amongst thousands of different stock and options. And I do want to say you will receive access once you enroll in the university to all 3 majors. So don't worry about everyone coming at another cost or being a problem to get your hands on. You'll actually have full access to all of them. I like to show this a lot because this thing is huge to me. We've looked at our strategies strictly mechanical. So the first column, I looked at a Forex market, a couple of futures markets, something in energy, and just said if you followed mechanically over the series of time here, what the result was. And then if we go ahead and you add what we teach you in the undergraduate and the majors, what do you add to your result? And you end up with a percentage increase overall. And the huge point to understand here is education is not just something you spend your time at or might be interesting. You monetize the training. You monetize the education. 32% to 84% bump in performance, not a minute more spent just by incorporating what we teach you. Mike, for instance, has been trading options for years. You get the benefit of that. When you have somebody like Will, one of our coaches, who's been trading in futures for years, or Ron in Forex for years, they have learned these things through the school of hard knocks, experience, and thousands of trades. This is what we share with you, myself and Brian included, in the training and in the education. And it makes a huge difference in your potential profit. Just to give you an idea on some of the Forex markets, some of the futures markets, in addition to what Mike already showed you today on the options markets, there is great opportunity across the board. Now, we win and we lose. This is made up of winners and losers. Of course, this is realistic trading. This is not meant to be the holy grail. Well, we're going to promise you that every trade you take is going to magically work, because if every trade worked, it would be magic. This is realistic. Put the odds in your favor. Have a greater % chance of the trade working out than not working out, but always knowing, even if it doesn't work out, where you're going to exit and just take a partial loss, including on options. We're not going to sit there and risk the entire premium and let it go down to 0. We're okay with being wrong on certain trades. On Forex, lots of pip opportunities. This is all based upon just using the daily charts. In some recent webinars, we've taken you through the Forex in great detail. So by all means, take a look at some of those videos, watch some of those. Great opportunities, and this could work very nicely for those of you doing options trading because it's also done just once every 24 hours. I know I've got some people here tonight who are already on the trend jumper. There's some great bonuses when you jump into the university, when you take the trend jumper and jump, you have the professional level calculator, and those of you on this kind of know what that is. Does a lot of really neat things and some very advanced programming that makes trading the trend jumper that much easier, additional trade plans. One of the big things that you get and have access to, I should say at least, is the trade assist automation. We only make this available to students inside the university because of the training that's involved and the support. The ability to have stock and options, Mike's looking at to add some trend jumper plans in the stock world, and of course always great training built around that. Just to give you an idea what trade assist automation is all about, is to also help you automate some of the process of trading. And this applies more where it's needed, which is in the day trading world, where things can move quickly. Like, for instance, Troy recorded a video, one of our coaches, on Friday. He traded crude oil and heating oil at the same time, and he actually showed how he missed a trade on heating oil because both of them were moving quickly at the same time. Well, that's an area where automation can really help you and help you get in and not miss certain trades. Now, with options, it's not as essential because you're not going to be spending a lot of time, like Mike showed you, doing a lot of monitoring. But it's a really great benefit that is available to you optionally inside of the university that a lot of people have gotten very excited about. So how does this work? The schedule of classes, if you enroll, you immediately start to go through the prerequisites. As soon as you're done with the prerequisites, we have archived the last class that we did live in January, so it's just over a couple weeks now, and you can go through the undergraduate class immediately. When you start the undergraduate, you also get invited into the live training rooms, which I'll talk about here in just a moment. Once you finish the undergraduate and you're attending the live, you should start to trade live. Then I would suggest you start to go through the major program. In addition, on March 19th and 20th, we're going to do the entire 2-day live undergraduate again in person with the full coaching team. The benefit you'll have is you'll have already been able to go through the undergrad, and then you can attend the live event, and it's going to be, for you, that much easier to follow, to interact, and to have everything mastered. So really, inside of a month, you'll be up and running, trading live, and then we can really fine-tune your skills thereafter. So this is how this works if you go ahead and enroll here today. The whole idea is start to work through the process as quickly as you can. So what do you get overall? And these are the value. You won't be paying anywhere close to this, so I don't want you to get afraid when you see the prices come on the screen. The home study course that I talked about, all of that is available to you immediately. The multi-day undergraduate program, you get immediate access starting right away to the 2-day, and then you'll get to take a retake, and again, like I said, in March, be able to do it live, and that's valued at $29.97. All three majors, we used to sell them for $9.97 each. They're now included, all-inclusive, $29.91. You get all of the PTU strategies, and let me tell you, this is the PTU. We have a strategy that we just released called the Breakout, and also the Trend Jumper. The reason we have those, they all very much look very similar, but what you're going to find is different markets have different behavior. What I have found is on one market, the Breakout is going to dominate over PTU, or the Trend Jumper is going to do best on certain markets as well. So having the flexibility means you're going to have the skills that you can use across the board for a lifetime. You get full access to the student club, the library, the forums. In addition, we do live in the market trading 4 times a week during the U.S. market hours, where we cover futures, Forex, and then twice a week we come in and cover stock and options. We do European market hours twice a week as well. This is a value of $597 a month. It is also all-inclusive. We do group coaching calls, so every month we do a major call on the futures or the Forex or stock and options. We answer questions. We present new information. Again, the coaching team is there presenting this live to you. Just like this environment, you get the full PTU Trend Jumper and the advanced software that only people get inside of the university. There's a TradeStation special offer, so if you decide that TradeStation is a platform for you, it's got a $500 value. In addition, there's a full tuition available from TradeStation. If you want to participate in that, they'll actually reimburse back the entire cost of the university if you go that direction. It's not mandatory by any means, but it's a neat deal if you decide that TradeStation is a good choice for you. Total overall value is $16,964. I do want to tell you, and that's the value, trust me, you won't pay anywhere close to that. We do have a complete 100% satisfaction guarantee. I ask you to do 4 things: review the prereqs, attend the live undergrad or the replays, install the indicators, and make some trades. They can be fake trades, right? They can be demo. As long as you do that, there's no way you're going to ever want to give this back. What Mike showed you, how quickly you can recoup your investment, whether it's on options, futures, or Forex, you're just not going to want to. You give it back, it doesn't work any longer, right? So what's the point? And I do want to say for right now, and this is going to change this year, there is no additional monthly payments on anything that we talk about here today. So the tuition for somebody brand new, which is about, I think, about a third of you, is $39.97, or you can do a 4-pay, just $9.99. So break it up over 4 months if that's easier. About 2/3 of you already own an EPICS course. So as a reward for that, we'll go ahead and take, basically rewarding and rebating you $1,000 immediately, dropping it down to $29.97, or a 4-pay of $749. And the final offer is if you already purchased Trend Jumper, I'm going to rebate back the entire cost, let you get into the university, get everything Trend Jumper that's available in the university, plus all the PTU systems, training, majors, and education, and that's just $2,000 all in. So those are your 3 options overall. Let me just kind of show you one other thing we want to make available for those of you who attend the live webinar. If you do the pay in full, you can take an additional $500 off. You do need to use a code. It's 500 off, and that'll drop down the payment overall. So if you go to netpix.com/enroll, you'll go ahead and use the code 500 off, or just do the 4-pay, and we don't have any interest, no additional hidden charges or anything like that. It's just the full amount divided by 4, and that's what you pay. Or go ahead and do the full pay and take off another $500 off the $39.97 or the $29.97. Like I said, if you're on Trend Jumper, go ahead and do the full $2,000 full pay, and that's going to be by far the best overall deal. I'll bring the link up here in just another minute. I again want to remind you, how quickly can you make your money back? If I'm in your shoes, that's a big part of my decision. I have complete confidence because I've seen the performance again and again, week in and week out, quarter after quarter, with the PTU. We do a hangout every week that's to the public on Fridays, and people come, and it's a live webcast where we show the trades and the results, and it's just consistent every single week. Nothing's going to change when you guys enroll here. I'm completely confident, but that's why we have the satisfaction guarantee. This scholarship, just to kind of give you some details on that from TradeStation, is if you open an account there and have your account coded correctly with an EPICS offer, they'll rebate you back through commissions up to the entire enrollment cost, whether it's the $39.97, the $29.97, or the $2,000. So while you're trading and while you're profiting, you can actually have your full tuition reimbursed back to you in the scholarship. I do like to show, we have, obviously there's a lot of competitors out there, there's good schools out there, they're all very pricey. There's one of the more well-known academies that are out there that by the time you get done buying every level and everything and getting everything, you're up over $20,000. It's very common to be right around $10,000, and a lot of times very few things are included. With the PTU, it's not one trading system, it's 3. It's also exact trade plans literally on dozens of different markets. There's no ongoing cost, no charges for the live trade rooms. A lot of these places hide. They don't want to do anything in the live markets because they don't have the confidence that we do. We do everything in live markets. All of our live training is literally when the markets are open, and we're doing trades as they're open, not just looking at best case scenarios. So we think we've been doing this for 17 years, the best overall university training systems in the marketplace. So what I want to do now is see, I know we've probably been answering questions rapid fire, kind of hand the mic back for a moment to Brian or to Mike and see, are there some questions you guys want to answer verbally here?
Yeah, Mark, first of all, let me say very active question session so far, been rapid fire like you said, so very active group tonight. One of the common questions being asked, and it's one that's asked quite commonly, is what platforms are supported inside of the university, and the answer is very simple. It's 2 platforms, TradeStation, and that's what Mike previewed his charts tonight. That's what you were looking at. So TradeStation is one option, and then NinjaTrader is the second option that is available for you to chart on. Now, with that said, you can chart on those 2 platforms, but you can open a brokerage account with any broker of your choice. So that's the really cool thing here. You can make your charting decisions on those platforms and then place your trades elsewhere. Mark, in regard to, let's see, the questions that I was kind of saving for Mike are left blank. And if you want to just scroll maybe from the bottom up here, and I think you'll see some of those
Sure, yeah.
that pertain to him.
Yeah, no problem. Hey, Mike, question here from Rick. How do you know what expiration date to use?
Rick, good question. There's a few different ways that you can do this, and a lot of it depends on how long you anticipate being in the trade for. Okay, this is where I really encourage you to get used to the products that you trade. I don't want you trading Amazon one day and Google the next day and Baidu the following day. You want to trade the same names consistently, because that way you can get used to an average holding time of a position. And then that way we use that information to determine our strike price and our expiration cycle that we look at. It's all based on our average holding time.
Great. And then a question, I think, follow up on minimum amount to be able to trade options. Obviously, you have to have enough to pay for the premium. Mike showed you somewhere it's under $100 and some that are over $1,000. I would typically say minimum, at least my opinion would be 2 to 3K is kind of like the minimum. Obviously, more is always better. It gives you more flexibility. I don't know, Mike, what you think about that. Is that the minimum or some other amount?
No, I think that's a good starting point. Just keep in mind, I showed you 4 different trades, and all of the costs for those trades were very different. Are you going to take a trade on Apple with a $2,000 account? No, but you can take trades on those lower price names like FXI, for example, where we're getting in for $70 per contract. So depending on your account size, you'll want to be very cautious with the names that you trade, and we can help you out. We can help you determine that based on your overall account size.
Yeah, it's a great point. It's just like the same in futures. We do the same thing. There are some markets like a Dow E-mini that a much smaller account can handle and trade. They're not going to rush right out and trade the DAX futures. Eventually you will, but you want to start something appropriate for your account size. Will's asking, typically if a trade hits the stop, would you lose all your initial investment?
No, you don't, and that's the great part about the way these trades are set up. I showed you an example on Amazon where we get in for $1,200, just over $1,200. The trade loses. Okay, we stop out of the position, but we're still able to sell out that option and recoup over $800. So we took a $400 loser. Honestly, I can't tell you the last time I took a full loser on an options position. When we hit a stop point, we're typically always able to recoup at least part of our overall investment there.
Very good. Thank you, Mike. Let's see. Do you consider the Greeks and implied volatility when trading options?
I absolutely do. And I walk through that in some of the training materials inside of the university. We don't have time in this type of a setting to walk you through exactly how I do that, but we definitely take into consideration the Greeks. I use delta and theta quite a bit. Implied volatility, it's very important. That's another reason why we like to be very familiar with the stocks that we trade, because you can get used to what levels of volatility are typical on a stock. That way you can tell if the options are expensive or inexpensive on a given trade.
Thanks, Mike. Question from Ed, actually on the DAX futures in this case. What is the minimum margin? I'm really not sure exactly what the margin is offhand, but what you don't want to really care about is what the margin is. You want to care about actually what the risk is for trade. Let's say on the DAX you're going to risk 10 points. That's 25 euro dollars per point. That's 250 euro dollars. Let's just say that converts to 300 US dollars. You need to divide that by, whether you're willing to risk 2% of your account, 3%, 5%. If it's 2%, divide that by 0.98. That's going to tell you kind of what you need to have as your account size overall. So in this case, if I was divided by 0.02, so if you take $300 divided by 0.02, it says you need a $15,000 account. If you're going to say 5% per, if you're really willing to get that aggressive, it's $6,000 per. Not probably a good idea to risk 5% of your account per trade, but that just gives you the way you should think about it, not what the broker says is the minimum amount required. They don't really care about your account making it or not. Al, on question an answer to your question, you based the size of the range bars and momentum bars that Mike was showing you. We based it on the monthly charts, and we have a very specific formula that we give you, so you can change that once per month. Very, very important to maintain the overall performance. Joe says, so other than during earnings, you take every setup for those 6 stocks. So are there anything else besides earnings, Mike, I guess, that sometimes has you to stand aside?
There's a few different answers to this question. Number one, could you take every setup as they come with the PTU system? You absolutely could, and you could be profitable. What I teach in the training is there's an additional, I'm going to say 5% art, to where once you get used to the stocks that you trade, there might be cases where you might filter out a trade due to a key swing level or due to a key news release that's coming out. You might just decide to hold off and filter a trade out. Some people say, well, gosh, that just seems very, very discretionary. So just keep in mind, you don't have to do that. If you wanted to take every trade set up on Apple as they come, can you be successful doing that? You can. I can increase my performance by being selective in some cases.
Yeah, and then we showed you that even on the Forex and Futures with the training in the undergrad and the major, 30 to 80%. Being mechanical is great, and you can be profitable, but actually being a knowledgeable trader and having education and using the things that we've learned over the years of being involved, that's kind of what makes a huge difference overall. I mean, that's kind of the key. That's the difference maker between having the knowledge and not, and it's well worth the time and effort. I did put on the screen for you guys our contact information if you want to call, if you want to email, if you have more questions about the enrollment, anything like that. It's probably great timing for the enroll, especially those of you in the U.S., because tomorrow's the holiday. Maybe you can kind of sort of start to get rolling on the prerequisites. There's no reason you couldn't do that and start to go through the undergraduate during the week, get everything going, and then start to attend the live sessions when you're ready. Maybe the following week would be good timing on that. And by that time, you'll kind of be up and running, and then you can certainly come back as well in mid-March and go back through the undergraduate training if you'd like, or even parts of it, and be able to interact with the entire team. So the timing is definitely good overall. Let me see if we have any final questions before we wrap it up. There's no monthly charge, Ronald, so that's all inclusive on the live sessions. And Rick says, what dates do option expirations occur? So obviously, Mike, I'm sure that's something you have to pay attention to, just like we do in futures as well.
You do, and it depends on what type of option you're trading. If you're trading the monthly options, it is the 3rd Friday of the month. If you're trading the weekly options, obviously those expire each week. So just depending on what expiration cycle you're looking at.
Super. All right, well, I know it's a Sunday night, and I'm sure some of you want to get back to whatever you're doing with your family or watching The Walking Dead, whatever the case may be. So we really did want to thank you all for attending. Thanks to Mike as well, did a great job. I always kind of love hearing about options as well, because it's something that I keep incorporating into overall what I do. And the opportunities are there in such a great way to scale. And it's, again, I think it's one of those hidden gems available to all of you. I mean, I think Forex is great, but there's a lot more to trading, a lot more available to you than you think, and certainly well beyond just beyond Forex. So again, also thanks to Brian for all the rapid-fire answers, and thanks to all of you. It was a super interactive group. He asked a ton of great questions, and we really do appreciate that. So absolutely get yourself enrolled. Grab your spot in the PTU. Got the class coming up here. Would be excellent timing. We certainly look forward to welcoming you all aboard. And also, definitely if you need to contact us or have any questions, again, information up on the screen. So thanks, everybody. We've got some more webinars coming up as well. If you just check the schedule, I know we've got one on full-time futures, day trading, and Forex trading coming up, so by all means attend those as well. Take care. Thanks, Mike. Thanks, Brian.